All right, y'all. Hello there. So let's just go ahead and get right into it. We're going to talk about assets, liabilities, and net worth. So we're going to talk about how much you're worth based off how much you have and how much you owe. So the student is expected to know you're supposed to be able to create and organize a financial asset and liabilities record and construct a net worth based off of that. What does it mean to be wealthy? So to a lot of people, it means a lot of different things. It means that you're worth more than what you owe as far as what the government and the statistical way of finding it is. So some of the things that you can use to determine wealth, it's basically anything that people find valuable. Your home, your car, furniture, paintings, jewelry, vehicles, boats, motorcycles, things like that. And then things that can hurt you, debt, credit card loans, owing money on your car, owing money on your house, college loans, and anything like that. If you owe money to anyone for any reason, that is a liability. And then an asset is anything you outright own that you don't owe money on, that is yours, and that if you sold it, you would get money for it. All right, so let's talk about this. Net worth is the value of what you own minus what you owe. So if you have a car that's worth $30,000 and you own it and do not owe any money on it, it would be considered an asset. If you have a $30,000 car and you still owe $20,000 on it, it is not an asset. It is a liability. You owe $20,000 on that car. That means that if you sold that car, you'd have to give the bank $20,000. Then in that instance, 10,000 of it would be considered an asset and 20,000 of it is a liability. So in this case there, more of it's a liability than it is an asset. Okay, so assets, things you own, cash, bank accounts, investments, houses, things you own. Liabilities are things you owe, mortgage, car loan, credit card balances. I know this can be kind of confusing because, you could look at your car as either one. You could look at your house as either one. But you just got to look at them in things like this. So look, if you have an investment, if you have a bank account full of money, that's an asset. If you have a credit card where you owe a ton of money, that's a liability. So basically anything you owe money on, liability. Anything you own that's worth money is an asset. The net worth is the difference between the two. If you take your assets and you subtract your liabilities, that's your net worth. If you have more liabilities than assets, you're going to end up with a negative number and your net worth will be less than zero, which is not good. You always want your assets to be more than your liabilities so you have a net worth. Okay, so now let's look at this. So if we want to calculate our net worth using a table, we have Tanisha here who gathers the financial information to prepare her will, which doesn't sound like too fun of a thing, but I guess you have to do it in life at some point. So categorize the various assets and liabilities into the table below, then construct a net worth statement. So she has a house, current value. When it says current value here, that means that that's how much that she owns it, okay? It's not saying that she owes that much in debt. She owns that house and it's worth that much money. So for this, we would go ahead and put it as an asset. We'd put house. We'd put $75,000, $75,500. We'd put car. We'd put $8,920. And then we'd have credit card debt. Well, credit card debt's a liability, isn't it? So we'd put it under here under liability, $30,175 for credit card debt. Then we have a student loan for $75,630. That's definitely a liability. We have a checking account. That would be under assets, $2,410 of an asset for a checking account. Then we have furniture and jewelry. Well, we're going to say that these are something she owns. She owns her furniture. She owns her jewelry. She didn't take out a loan to buy them. She owns them. So those would be an asset. That would be $800 for furniture and jewelry. So then what we would do is we'd go ahead and take all our asset values and add them up, and we'd have a sum here. Then we'd have our liability values, and we'd add them all up here, and we'd have a sum here. And then we would go ahead and subtract our liabilities column from our assets column to get our net worth. And let's take a look at what that would look like, because I have it on the next slide. All right. So for the house, 75,500 plus 8,920 plus 2,410 plus 800. You add all those up, you're going to get $87,630. So now she has a credit card debt for $30,000 and she has a student loan for $75,630. You add those up, you get $105,805. That's not good because that means that her liabilities column is larger than her assets column. So when I subtract these, I'm going to get a negative number. So that means that Tanisha is worth less than nothing. She owes money. She does not have any net worth at all. So basically what will happen is she writes her will and tries to give things away. She doesn't have anything to give away. She can't give away any of her stuff because she doesn't have any net worth. Nothing she has is technically hers. It's owned by the credit card and student loan companies. So what we have to do here is it's talking about why is Tanisha's net worth different than those at any other point? Well, what's different about hers is that she doesn't have a net worth. She owes more than she owns. That is not a good thing to do. You want to make sure in life that you always have a net worth. Never take out more loans than you have the money to pay back. All right, so now you guys go ahead. I want y'all to go ahead and look at these. I want you to figure out your own total assets and liabilities. You can make your own column and sheet like you did on this one. You can use this one if you want to. Just use the blank one, okay? Go ahead and make your own asset and liabilities table using this information and figure out the net worth of this individual, okay? The Rasco family, figure out how much their net worth is. Pause this, come back to me, and then we'll talk about it. Y'all go ahead. All right, welcome back, welcome back. So let's talk about what's our assets here and what's liabilities. So our house, that's an asset, $75,400. Our automobile asset, $3,200. Retirement account, that is an asset. That's money that we have stored away in the bank. Student loan, $24,980. That's a liability. Checking account, that is an asset. Credit card debt, we talked about any debt, that is a liability. If you guys got smart on this one, you notice that all the liabilities were labeled with a negative. I wasn't going to tell you that. If you noticed it, that's awesome. If not, now you know. Those are our two liabilities right there. You add those up, you're going to get the $43,880. And if you add up all the rest of the assets, you'll get $89,720. Hey, the Rasco family actually has a net worth. They're not worth less than nothing, as Tanisha was. So you're going to go ahead and take $89,720. You're going to subtract. Annotate this real quick. Let's put a subtraction sign in here. Subtract $4,880, and you will get $4,840 for their net value or net worth. That's how much they are worth. All right, really, guys, that's really all there is to asset and liability tables and net worth. They're not super complicated. They're just addition and subtraction and being able to recognize what is an asset and what is a liability. All right, y'all go ahead and do the activities associated with this. If you have any trouble, let me know. Thank you.